Have you ever experienced this? Always feel too late when enter a trade at a golden cross or death cross of 2 EMA, like this GBP USD. We could see if I buy here and sell here. There is no profit, even thought the price actually have moved up for a profitable wave. So what should we do to get an earlier signal? Use shorter EMA? But how could we know what length is good for this asset? It's hard to say. So in this case, MACD indicator is actually more suitable for this situation. Now let me give you a quick comparison. So here we also have the McD that is set to default settings, 12 and 26. So as you can see, every time the crossover on the McD gave a much earlier entry signal, compared to the crossover on the moving average. That's why I prefer MACD as my momentum indicator. So, in this video, I'm revealing the best strategy that you can use with the McD indicator. If you like this content, please smash the like button, subscribe and turn on the notifications bell and share to your friends. So let's get on with the video. The Moving Average Convergence Divergence, or also known as the McD. It is a trend-following indicator that shows the relationship between two moving averages. Now firstly, let's see how the McD works. So there are four components to the McD. First we have these two lines, the McD line and the signal line. The McD line moves faster and is more sensitive to price changes, which will be the main focus of the McD indicator. Compare that to the signal line which reacts slower to price changes, therefore giving it a more smoother appearance. Next we have the histogram, which represents the difference between the McD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green. And if it crosses below, the histogram will turn red. The gap between the McD line and the signal line also affects the size of the histogram. As you can see, if the two lines are further apart, the histogram gets bigger. And if the two lines get closer, the histogram becomes smaller. And finally we have the zero line, which simply represents the center of the McD indicator. Now the way traders utilize this indicator to identify momentum is by looking at the crossover between the McD line and the signal line. Let me show you an example. If the McD line crosses above the signal line, it indicates that the market is on an upwards momentum. And if it crosses below, it indicates that the market is only downwards momentum. Traders can also utilize the size of the histogram to determine the strength of the momentum itself. If the McD crosses above the signal line while the histogram is getting larger, it shows us that the upwards momentum is getting stronger. Similarly, if the histogram is getting smaller in size, it indicates that the upwards momentum is getting weaker. Now let's talk about the different strategies that you can use with the McD indicator. So first, a common mistake that traders make is that they're using the indicator by itself. Let me show you why it's a bad idea to use the McD alone. So here we can see that the overall market is only downtrend. However, the McD is crossing over upwards. So notice how the signals are contradicting. The McD is indicating a bullish momentum, but the market is only downtrend. This is exactly why you shouldn't use the McD by itself. Because what the McD is showing us is only the short-term momentum. And as traders, we also need to take the long-term trend into consideration, because we never want to trade against a trend. And so, a simple but high win rate strategy that I recommend for beginners is by combining the McD with a long-term trend indicator, like this secret but amazing EMA. This way we can safely trade the McD, while making sure that we're staying within the same direction of the long-term trend. So this is how you trade the strategy. The first step is you want to identify the long-term trend by looking at this secret long-term setting EMA. If the price is above the EMA, it indicates that the long-term trend is up. And if the price is below the EMA, it indicates that the long-term trend is down. So once you've identified the trend, the next step is we want to look for crossovers on the McD. That shows the same signal as the long-term trend. So in this particular example, we can see that the long-term trend is up. Meaning we only take signals when the McD crosses over upwards, and so here's where you want to take a long position. Now for your exit strategy, you can place your stop loss at the nearest swing low, and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. So let's look at another example. In this chart, we can see that the price is below the EMA, indicating that the long-term trend is down. Next, we have a cross down on the MACD, and so this will be our entry signal to go short. Now for your stop loss, place it above the nearest swing high, and set your profit target at 1.5 times your stop loss. And as you can see, the price hits our profit target, and so this counts as a successful trade. Now do you want to know the length of this secret EMA? Leave EMA to the comment. I will reveal the answer there if many people want to know. So that was a simple MACD strategy for beginners that you can use. Now as for the super scalping strategy for advanced traders, we will talk about it in next video. So I just revealed to you high win rate MACD strategies that you can immediately use right now. And all I ask for in return is for you to invest 2 seconds of your time into liking the video, and subscribe to the channel. It literally takes only 2 clicks, but it means so much to me. And you can also check out my other videos as well. So thank you guys for watching, and I'll see you in the next time.